Hey, Matt here. Hope you had a wonderful spring break. Just checking in with another market update. Always stuff going on, obviously, these days and what's happening there. So, as we know, we're trending towards the next Bank of Canada announcement, April 16th. It's a Wednesday. So, right now, market expectations are leaning for no change. So no rate cut, but 36% chance of a rate cut and 66% chance of no change. This was as of Friday last week, so we'll get updates on that over this week ahead. April 2nd is important because that's when the tariff pause for a lot of the bulk of those tariffs is expected to end, and or tariffs get implemented. So we'll see what happens this week with that, because that should have some shifts in the market and what's going on. Inflation's ramping up down in the U.S. So, and more importantly, inflation expectations are ramping up, which generally leads to some potential upward pressure on interest rates potentially. So we'll have to see what happens with that, and if there's any updates on the tariffs and agreements and things like that. But the good news is, when it comes to interest rates, this is the lowest rates have been for many years, right? So we're seeing some actually very good interest rates because if we take a look down here, which if we really dive into it, we can see that the 5-year variable right around 4% for an insured variable, right? So that's prime minus 90 basis points approximately, plus or minus. And then you can see fixed rates, 5-year sub 4, 3-year 4, right around 4, potentially a little bit lower, depending on the structure and the situation. And then even on the uninsured, so that's the refinances. That's for refinancing to do a collateral charge, get home equity line of credit for investment, for renovations, things like that, and or purchase over 1.5 million and above. Those are all uninsured. Then we're seeing improved interest rates there as well. The 5-year in the lower fours now. We're seeing 3-year also lower fours. Home equity line generally prime and prime plus a half in that range. So 495 to 4545. So what we'll have to keep an eye on is, do we see any rate cuts forecasted for the future? But is there potentially medium term upward pressure or longer term upward pressure on interest rates? Time will tell. It's hard to really predict, obviously, with so much volatility. But the good news is the qualifying rate, which is also very important, is the rate used to qualify has come down significantly. So the amount of mortgage that we qualify for today for $1 of income is significantly greater than it would have been a year ago, 2 years ago, because of the fact that interest rates have come down quite a bit. So we'll see. We'll have to keep an eye on that and see if that, increases activity in the market. I think that's the one question: is, do we start to see more activity in the markets given lower interest rates? As it's been, a little bit, I'd say, subdued. April's generally a quite active month for purchases, so we'll keep an eye on that and see what happens there. If we jump to the yields, you could see all the volatility, right, in the yields over the last few weeks. Right now we're sitting at 2.645, which is slightly lower than it was for quite a few days last week. It's come down a little bit. So this will probably all shift as we move throughout the week. Learn more about the tariffs on April 2nd. Get more information on inflation data here in Canada as we come into April, and really map out strategies from there. But a strategy that gives flexibility that a lot of people like is that start variable for the option to lock in if we do see upward pressure later in the year on fixed rates, maybe lock in then or at some point in the future. Because market expectations right now is we could see some immediate or short-term improvement or downward pressure, which we've already seen. I don't know how much more we'll see. We'll have to keep an eye on that. But some potentially short-term with potentially mid to long-term upward pressure. So we'll keep a close eye on those things. But you can see that interest rates are very good. And if you're looking to purchase, clients looking to purchase, looking to get out of a higher rate mortgage, for example. The other thing is big banks. Some of them haven't reduced their posted rates yet significantly. So the penalties on those can actually be economical and be in a 3-month interest on a fixed rate with like a Scotia TD, for example. So you can move from a higher fixed to a lower fixed, minimal penalty. So we've helped a lot of families get into a lot lower interest rates and save tens of thousands of dollars on interest over the rate of that existing term in terms of payment and or interest savings, depending on how we want to structure that. So, always here to help. Have a great week. And any questions you have, let me know. We'll talk to you soon. Thanks.